Good morning and happy Thanksgiving, everybody. It's Friday, the 24th of November here in Australia. It's basically the Thanksgiving weekend for a lot of you over in America, so I'm not expecting many, if any, to actually attend this one live. So anyway, with that being said, let's do the disclaimer. All Bookmap Ltd materials, information and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay. Let's have a quick look at the calendar. In fact, why don't we actually just have a quick look at Bookmap while we're here? So before we do the calendar, we'll just zoom out and just see where that liquidity is. So you can see NQ may be attracted to this liquidity just below. I actually had a short about 10-15 minutes ago. But anyway, let us have a look at the slides for today. So the first thing to note is that even though this is a holiday weekend, there is one piece of major news. It's not during our breakfast hour. It's at 9:45, 15 minutes after the open, and the trading hours should be quite limited today. I think it's just this morning in the RTH session. In fact, let's just watch this hit this liquidity or get very, very close actually. So we're just watching the micro auctions that we were talking about the other day. Maybe we've already turned, but let's have a look. It's just getting very, very close. This liquidity's been there a while, so I thought we would get to within a couple of ticks on NQ. ES is still close to its overnight high. Here we go. NQ just ticking down into this liquidity here. You can see the numbers hitting the market. So they've had 16, and there's a nice little flush down through that liquidity. Could be a little temporary turn, but there is some more liquidity below if you zoom out. And the overnight low is not too far away. It's just around about 25, just around about there. So they may go stop hunting below it. Let's have a look. Let's make sure we zoom vertically into the volume profile to see whether they're still auctioning down or whether they've actually got a rejection yet. You can see that little vertical slip down. Those tend to get reclaimed, as I was talking about the other day. Down the bottom we've got the volume pressure imbalance, which I have got working today. I'm just going to get rid of the price axes. So that little vertical slip down was this little mini climax, and if you look across to the final volume on the bid, it was just 2, and that's often what you get, a little tail, just in this case a very miniature tail into the liquidity. Maybe it'll come back down and we'll get a spring, but we shall see. While it's doing that, one thing I do want to mention on Bookmap's behalf, because this is the Thanksgiving weekend and today especially is Black Friday, so Bookmap is doing something that they ordinarily do not do, which is quite a large Black Friday discount. It's on this page here, bookmap.com/black-friday, and you've got Global Plus, 3 months off for new digital or current Bookmap monthly subscribers. So that's quite a good deal. And there's a discount of 60% off for the first month for new customers. Feel free to go to that link yourself and read about it. Okay. I will actually once we have some action worth talking about, once we've done the image slides, I'll talk about how I normally look at my subscriptions. It really is a twice yearly thing, and they are normally close together. It's normally around this time because we have such good discounts on a lot of the monthly or annual subscription services that us traders do use, or in some cases have to use. And also I tend to have a look relatively early into a calendar year to see what really was of benefit to me in the previous calendar year. But I wouldn't ordinarily do it unless there was a major discount like this in the middle of the year or towards the end of the year, as it actually is. So we've had a test so far. That liquidity there was moved down, and if we zoom right out, we can just see what is hitting the bid above. Are they still auctioning up or not? Meanwhile, ES is grinding its way down very, very slowly. But we've got, at the moment, we've got a little rollover of only 3 at them. The bottom, that just does not seem like they finished in ES. Anyway, let's do the slideshow quickly. Okay, so I mentioned that we have the S&P Global Composites and some real news at 9:45. That may give us a bit of volatility, and we can talk once we do the slideshow of what tends to happen this time of the year and generally on holiday type weekends. Okay, reminder where we are in the context on the daily. ES is looking very, very close to that 4,600 round number and a previous peak, so they may well stop hunt above it, and you've got the 4.7 not too far away as well. NQ is the stronger index, and we're getting very, very close to this level up here, this peak, which was a multi-month peak. And yeah, I can see that we have tested close to it, but it will be surprising to me if we don't go a little bit further. We'll talk about seasonality and that in a second. Let's just finish the slides. This 10-minute slide, I haven't changed the vertical scaling from how I normally have it, like I had it on the Wednesday. That just shows you how compressed the activity is yesterday and today. And that's what you'd expect because there's not as many traders around. And NQ, a little bit more volatile, and we have tested out the stops under yesterday's low, but we'll talk about what yesterday actually is when you get to Black Friday, because it's not what I would call the previous day, the Thursday. We'd have to actually look the last day there was real market activity. So let's get rid of the slides and let's have a look there. So we had that nice little rollover at the bottom in NQ, and then they tested that, and now they've had a swing away, and we can see what's auctioning on the way up. And that, yes, there's a nice little bounce off that. Okay, let us have a look at what I mean by yesterday's levels are not necessarily yesterday in this context. Whoops, where did it go? Okay, I just have to be careful when I haven't got this overlaid properly. I might just make it no. Oh. Okay, that's a little bit better. Okay, you can see yesterday's RTH. Yesterday's calendar day was Thursday, and you can see the small action that took place, that we've already taken out the high and the low in the overnight session. And what I mean by the levels that I would look at is the previous day when you had a full RTH session. So those are the levels that I'd be looking at. I'd also set the weekly high, and it's got a nice bell curve in the middle that I'd be looking at as the boundaries of the activity. The only exception to that I'd make is that sometimes when the trade is that thin, and it might be this thin, we can't predict the future, it gives the algos a chance to really stretch the market. so they can take it places they ordinarily wouldn't. So you know, they can go a long way in one direction, and that brings up another point in this type of action. Some of the stuff that you would ordinarily use, especially for really quite short-term trading, is not necessarily going to work very well today. There is a lot of chop and there's a lot of variance or randomness, more so than in ordinary market activity. So some of the stuff that you'd use, you'd expect those gauges to work, won't necessarily work today. Okay, and we've got the settlement from Wednesday, which is essentially all we did today. We tagged that settlement and bounced, and then we're within this bell curve. So we're just basically unchanged really from the market action of Wednesday. So what one would expect is, let's get the pen, is, you know, that kind of action, so something around about there, you know, probably just beyond the bell curve, and yeah, we'll see what actually happens. Right, okay, let's have a look at NQ, and we'll just get that over. I've got to be very careful I do not dislodge it. Great. And the same applies to NQ. So if we take this drawing and we take Wednesday's action, we've got this nice little tapering off here. And you've got a bell curve with a ledge or an LVN just there, and so that's what one would ordinarily expect to bound or to, you know, provide the upper and bottom boundaries of trading both yesterday Thanksgiving and today Black Friday. But we shall see, because we've got that news at 9:45, so we'll see if that, you know, changes things up as well, because, you know, that can be a reason for them to move the market. Okay, let's get rid of that. Okay, so I think the action that we're going to see in this hour is going to be much slower than we normally see. I think we've had a few sessions, 2 or 3 sessions, where it's been quite slow, but I think this one should set a record for how slow it is. But one thing that looks like has been working in NQ is some of this resting liquidity in this filtered heat map. So if we take like that and we drag it all the way back and we have a look at what's really been going on since the London Open, I think I had a computer crash a couple of hours ago, so I don't have all that action. I will try and load a couple more hours of it. I thought I had already. So let's just load another 6 hours. This gives you an example, since you've not actually seen me do this, but I do talk about it on the help desk. If you just want to load an extra bit of data after you've had a PC crash, you just scroll to the left, click that left chevron, and then load as many hours as you might have backed up. So now I've done that, and it has not done it for me. So I thought I had actually done it. I had quite a lot of data. I had the entire session, so I'm not quite sure why it won't load for me, but computer problems are the bane of your life if you are trading. It's one of those things that you have to accept. I mean, you might be quite a competent programmer, you might be quite a competent IT admin specialist, but you're still going to have problems. You're going to have days where you have internet outages, and you have days where, you know, your trades don't get filled at the prices that they clearly should have been filled, and it is one of those things where the psychology of being calm and zen and meditating has to come into play, and you just have to accept you know, the pitfalls of the technology that we are currently in. Maybe one day when we've all got perfect links to the exchange, there won't be the edges that we currently have. So maybe we live in a very, very good time when those edges do exist, partly because of the glitches that are present. So anyway, I'm just looking up at what has happened here. We've had this test, we've had some liquidity get added, and that has pushed NQ back down again. So that's the zoomed out approach to using the heat map. Sometimes we zoom right in, and it isn't as easy to see that. So as it came up, I don't know if that's as clear as when you zoom out there. That is probably clearer, and you have enough time there. Even if you only got short there and you had your stop there, there's probably enough room to get a good 1 hour trade in there, and hopefully a little bit more if it goes down towards this liquidity over here. So yeah, that is definitely one way to use it on these choppy sessions. It may go from liquidity boundary to liquidity boundary a little bit more easily than it would do, or sorry, a little bit more clearly. In other words, you can see the liquidity boundaries a little bit more clearly on these kinds of days than you can sometimes in really active NQ European sessions. By the way, as I always say, please feel free to ask me questions. If you have any comments or anything like that, or you want me to talk about anything in particular, this is an absolutely perfect opportunity. I know we don't have many people on the webinar today, and I know a lot of traders will have taken this weekend off, but I'm here, so if anybody wants to ask any questions, the YouTube chat or in the channel in Discord, both, I will check them both, and feel free to ask. Okay, so what do I do in terms of subscriptions? I got burnt quite early on in my career that I went for a few of the lifetime subscriptions and I won't name the products in question, but that basically either stopped working or I stopped using completely within a year or a year and a half of buying a lifetime license. And that's one of these things that I learned off one of my trading friends, and something that I don't tend to do as much these days, or if at all. So I will always prefer to pay per month rather than per year. I do have exceptions to that. I have a Bookmap lifetime license, which has turned out to be very, very good value. And I tend to pay for TradingView, which I've got the most basic subscription, as I've explained, and I'm really using it just for the plethora of symbols or instruments that you can get in there. And I do that on an annual basis because they have this Black Friday sale. So I'm very pleased to see Bookmap have its own Black Friday sale to compete and grab people's attention, so they aren't swayed just by things like TradingView. Other than that, I go strictly monthly. I tend to review any software or specialist type services every 2, 3, 4 months that are paid on a monthly basis, and I have to be quite objective and critical of myself when I haven't actually used them very much, or they are not providing objective value. It's one of those things that you have to develop metrics. Again, I don't feel comfortable mentioning some of the products that I've culled over the years, but you have to go through your own metrics, and they have to be pretty objective as to why you subscribe to them and what value they're currently providing to the style of trading that you're using them for, whether it's intraday futures trading, whether it's stock trading, whether it's swing trading, option trading, whatever it is that you think you use those products for, you do need to regularly review if they are actually helping, or it's just you thinking that they are actually helping you. So that's one of those things that I do, and I do that again at the end of the calendar year and relatively early, sort of January, February in each calendar year. Okay. And in terms of Bookmap, I've got a lifetime license. I'm grateful for that. I bought that very early on, as I've said, within the first few months of Bookmap ever being released. And these days, as you know from the webinar, especially the last one, I try and focus how I use Bookmap. So if you didn't attend the Wednesday session and you're wondering where all the volume or delta dots, I'm trying to show Bookmap for two purposes. One, to reflect exactly how I use it in my trading, and two, for an educational purpose. And since I get a lot more value from a few of the things that are present or visible in Bookmap on the screen right now, such as the delta column, the volume profile, the numbers in the volume profile, the order book, a slightly dimmed out heat map, and today I've got the market pulse, volume pressure imbalance, which I'm going to talk about in a few minutes. Those are the things that are currently giving me real value. I mean, if I turn on these volume dots, let's have a look. Let me turn on the volume bars, for example. Okay, I will explain why I don't use the volume bars. I know you can have them much higher, so you can make these things, you can make these bars go away up your screen. You can change their colors, you can change how they're clustered, etc., etc. Why don't I have those volume bars? And by the way, it's interesting to watch as we're trying to get some fuel to go down, perhaps, that I don't know if they've quite got enough buy fuel to go down. I find that the bars interfere with what I'm looking at in terms of the heat map at the very bottom of that heat map. That's one of the reasons why I have it. I also don't think they add a tremendous amount of value to what I'm seeing in the delta column or the volume profile column. And the other reason is that I am a time and sales, both a visual and numerical trader, so that I prefer to see a volume in that format than I do with these volume bars, and that's why I don't have them. The volume dots, okay, and we can go through what they would actually do. So at the moment I've got a filter. We can get rid of that filter. So if we just go down and we just get rid of it, and we just click our way through it, so we watch these things grow and get rid of the filter completely. So it's now 3D bubbles, total volume. The way I look at it, I mean, I know you've got plenty of green dots up there, and you've probably got plenty of magenta dots, and green and magenta are the colors that I chose, but I find that clouds things for me. It takes away my focus from this delta column, which I find very, very useful. And it takes, let me just get rid of it for a second. It takes away my focus from some of these vertical slips, whether that's a vertical up slip or a vertical down slip. And I'm intrigued to see how the bigger players are manipulating the market up and down. And I spoke about that the other day, that when you get a really vertical move, there is a tremendous benefit in my eyes in using Bookmap to see things that are completely vertical through this price line. And this is just the last price that I've just shaded dark grey. I think it's halfway between black and white. I think Bookmap is one of the best platforms for seeing these slips. If you had a 5-second bar or a 10-second bar, if you used a candlestick bar or whatever you use, it would be much harder to see those. And the fact that you don't have any of the bubbles in the way helps as well. So I mean, as well, if we take these bubbles and we change them to delta, and you can see, yes, that there was an up move and there was a big bubble there. There was plenty of delta to push it up. Yes, but I'm interested in this vertical slip here that I think is likely to get retraced. If I get my mouse out of the way and I get my pen out and we draw these two vertical slips. So there's one there and there's one there, right? And it's the second one that intrigues me the most because it's more obvious than the first one. And that tends to get retraced. So I see that, and it's got two purposes. One, you can get in long if you think we're going to go up there. Two, depending on how far it goes up first, you might have a good multiple R target back around here. So it's just one of those things. Again, we've got to stick to the setups that we're using in our trading plans. You've got to develop your own, and you have to stick with where you target your entry locations in terms of price structure or whatever other structure, value structure that you use. So that is why I do not have the volume dots visible at the moment. Okay, maybe it'll change in the future. I think a lot of things do change in trading and the way we use things, but that is my rationale or explanation for it. Okay, let me get rid of all of that. Get rid of this so we can see the ES grind its way down. So far it's on this little retrace. Having a look on the 10-minute, yeah, ES is just heading back towards settlement really. So settlement's just there. If we have a look at, there's no real liquidity down here, so you kind of think that we haven't tested up into this liquidity here. So if that is a magnet up above, at some stage in RTH we might get back up there. Okay. Right. Okay. Let's have a look at something else as well. So if we go to Bookmap, we'll have a look at NQ. Well, I'm not overly focusing on live commentary at the moment because it is a lot of chop and randomness. But it does give us an opportunity to do things we don't ordinarily do. So we don't normally go and grab a web page and do this. So if you are looking for some details on something in particular in Bookmap, you go to bookmap.com, then you get this knowledge base through that menu that I just showed you. Then you search. So at the moment I want to talk about the market pulse, and I want to talk about the volume pressure imbalance that we have here. Let's have a look. Volume pressure. Okay, bear with me while I try and get hold of it so we can scroll all the way down to the volume pressure imbalance. Okay, this might not be legible, depends on the font that you are watching this in. So I've just blown it up a little bit so it's more likely that you can read it. Volume pressure imbalance is a technical analysis indicator that measures the difference between the total buyers and sellers volume pressure in the market. Okay. If there's more buying pressure than selling pressure, the widget shows it with a green bar and positive value, and the subchart line moves upwards. So it's all fairly basic stuff. Okay. What I'd like to point out about this, and again, one of my colleagues at Bookmap, Trader HE, has specialized in this, and you should maybe if you get the time, you get to read his posts in the Discord about how he's using it. But my main point in talking about this, or just highlighting this today, is that this is very different from something like an RSI, an oscillator, and I'll get a pen out again. An oscillator like an RSI just goes like that. There might be a line in the middle, and you have an extreme, and then you tend to fade that extreme. That's essentially what an RSI or any other oscillator does. And what the RSI is, it's a mathematical derivative of price, right? So all of these types of oscillators tend to be, or most of the common ones that are used, like RSI, CCI, etc., are some form of mathematical derivative of price, right? As I've said previously, I've coded loads of indicators. I've looked at the source code of lots of things. I've coded them. I've coded variations, etc. I don't believe there's any edge in that. I mean, it might be confluent for you. It might help you realize that we are at a mathematical extreme if price does do that. Go up to a top and then down to a bottom, but I haven't found a tremendous amount of edge that is reliable on a regular basis from something like an RSI. And hence, when I talk about trading and I talk about what exactly that I'm using, you will not find me mentioning things like RSI. I think there's a trading view indicator that I did, which is a table of RSI, and I did that because I wanted to experiment with the tables that you can code and present in TradingView, and I wanted to see things across multiple timeframes, and that's why I coded it. It's not because I actually use RSI. It was really to experiment with multiple timeframes and tables. Anyway, that being said, what I wanted, yeah, all I wanted to say was this is not RSI. The volume pressure imbalance is not a mathematical derivative of price. It is a mathematical, and I have to use the word manipulation because all of this formula stuff is effectively manipulating something so it fits within a graph that goes from positive 100 to minus 100. So it's got a normalization basis to it. Time check, I think it's exactly halfway through our holiday webinar today. So yes, there is a formula so that it bounds itself at plus 100 and minus 100. But other than that, it is quite an accurate reflection of how much pressure they are putting by way of volume on these little swings. So since I think Market Pulse is currently free for everybody, or I think this particular iteration, this algorithm within Market Pulse probably is free. I'll have to double check that, or I just ask anybody to double check that themselves. It's a chance for you to see whether it would help your style. So I had a problem with the version of Market Pulse I was using the other day, so I could not show this. I couldn't demonstrate whether it was useful or not. Just get back to the arrow, but let us have a look in NQ. Let's not zoom out too much, but if we look at the oversold or overbought, when they've applied a lot of pressure, and that tends to be, it tends to have a lot of confluence with how I look at that delta column. So that's why I'm showing and talking about the volume pressure imbalance. And I like the word imbalance because that is essentially what I'm looking for in this delta column. I'm looking for an imbalance. So, if we had a big push down and we had an imbalance of suppliers, that we'd either have a temporary exhaustion or we'd have some longer term fuel to push upwards. And the same again here. So it's got a double meaning. So it's got an indication of strength and also over extreme, sort of at the point where it can't go much further. So that's essentially what that is and why I'm looking at it, and why I'll probably put some posts in the Discord channel on if and how I find it useful. I'm thinking in ETH, it's going to be more useful in NQ simply because of the fact it's a slightly thinner market that moves a lot more in ETH. But in RTH, when you have lots and lots of volume across both of them, I'm thinking that that it will be just as useful in ES as it is in NQ. But anyway, I think Trader HE is mainly an ES trader, so his posts will be on the ES using that volume pressure imbalance. So that is one thing. So yeah, go to the knowledge base within Bookmap, have a look at that algorithm and see whether you see there may be any value in testing it out. Okay, as I keep saying with these heat maps, and even this filtered heat map in NQ, it does pay to regularly zoom in and out, whether it's vertically or horizontally, to get a better picture of how they're using this liquidity pressure to move price. So, I'm just saying that if you're in like that, you can see it there, but it's not as easy to see. That's why I like to have a different angle of view so I can get a better impression. It's also quite good to then use that to go and back test how they previously used that pressure to give you an idea. So, here they let price ramp itself up, and then they've essentially been starting to push it down towards this liquidity that was there. Again, my PC crashed, so I can't show you the liquidity from several hours ago, but this liquidity has been there for quite a long time. And now we're getting down into it. Doesn't mean that we're going to have a down day, but it just means that they wanted to get price down there, perhaps, so they could buy it. But we shall see. Maybe they sold it there and they just wanted to take their profits here. We cannot know exactly what's going on in these larger players' heads or bank balances or trading accounts. Okay, some questions. All right, White Shepherd, which pair are you trading? White Shepherd, I'm not trading any FX pair. The two markets that are present here are the NASDAQ futures and the S&P 500 futures. I don't trade FX. I have traded FX. When I traded FX, I found it was more sensible to trade on a 4-hour or daily basis and not on an intraday short-term swing like I do with ES and NQ. So this is not FX pairs. If you are interested in FX pairs, you can trade currency futures in Bookmap, and the best one, in my opinion, to trade is the 6E futures, which is equivalent to the Euro USD, EUR USD. Okay, let's just have a look to see what hit at the extreme there. Nice little 3, and they bounce back. So what you often get is a little tail and then some trapping of some decent high volume above it. And then that gives them enough fuel to have a decent retracement. So there's been quite a bit of action on NQ, whereas not been a lot of action on ES other than slowly trying to get to settlement and then bouncing a little bit. So if we go into the NQ example of the volume pressure here, it's the example of strength. So on this occasion, we're in a little trading range. I can draw this one. We're in a little trading range, and we get the first volume pressure imbalance. Then we get 1, 2, 3, 4, 5. Right. So it's just strength on this occasion rather than something that you'd fade because it's at an extreme. Again, I have said that I will post my observations on it after I've used it for a few more days and used it regularly. So I'm not going to jump to any conclusions now, but I just wanted to let people know that I am using it and that I will give it a good shake. Okay. And then, yeah, let's go into the actual micro auction. So we're just having a look to see whether we are still auctioning up. So that's what I call a vertical slip. And you can see the price just went straight up vertically. It does not necessarily mean that we're going to retrace that straight away or at all. Nothing is 100% in trading. It's just when you see something as vertical as that, and it applies equally to ES as it does to NQ, there is a likelihood, a good likelihood that it will retrace, and there that is a full retrace. That was quite a small one. If the market was a little bit more volatile than it is at the moment, they tend to be quite a lot larger. So if, for example, let's zoom right into the liquidity. Say you were still playing towards this short here, right? And we're looking in a price structure, so we need to draw. So we've got our last swing high here. So we draw across there. And this is the type A or B supply and demand that we talked about a couple of months ago. This is where it tests back up to the supply and doesn't quite take it out or does a double top. That was that category A or B. And where you have a vertical little move into that supply and demand, that might be worth investigating as a trigger. It's all about the structure of that and then what are you trying to get from the trade. In terms of what is the stop there, there is nothing by way of liquidity that provides a clear, tight stop. You've got price structure to provide a stop, and you've got the auctioning within this. So you have 12 there, which isn't ordinarily a nice end of auction, but you have got a nice little green tail. So you've got this little green tail there, which you're looking for on the delta to if you're going short at a trigger or at a location rather. So you've got that. And so, you'd have to determine some form of stop. And in this market where it's relatively choppy and there's not an awful lot going on, I would struggle to find a stop wider than 6 points just because you're not getting a lot. So if you're taking a stop wider than 6 points this time, it's going to be hard to get your multiple R's out of it. So, if you get in there, say you get in at the 35, 34 level, have you got something at least 6 points away? So you've got, I'm saying that you're going to need to get to 29, 28 to get 1R. And if you haven't even got 1R as a clear target, you've got this swing here, which is sort of the 29s. That is your 1R target. Is that good enough to take a trade? Probably not. You've got to have a lot of patience in this kind of holiday market. You've got to wait for it to get to some ridiculous extreme in your eyes, where the odds are very much in your favor in terms of the multiple R's to actually bother to take a trade. But that's just an example of how we'd structure it to have a look to see whether there was a potential short to get towards that liquidity there. But with all this choppiness and variance, very hard to take a trade. I'm thinking that the action that will be present from 9:30 probably through to 11, maybe 11:30, will be a lot better than this action. So when we looked back in at this, we had 12. So that, as I said, that was quite unusual in terms of that to be the end. So what I was hinting at was that it's quite often not the end of this little micro auction. And so this time they've auctioned back up towards this liquidity. The current extreme is 4. Maybe it's going to have a nice little roost up there, and then we'll have a really, really long tail, and that might be a much better short type entry, because certainly the R multiples would be a lot better in that scenario. I know I'm focusing mostly on NQ, but let's have a look over at ES. So what did we have? We had an MBO stop of 39 there. And we had some liquidity which held, and you can see them increase the liquidity just here, and now we're just moving back there. So if you're going to use that type of thing, that's only a scalp. So you basically you're saying that your stop is around about there, just the other side of that liquidity. You're getting in there, which is 4, 5, 6, 25, and your stop is ridiculously tight. So it's 1 point, and yeah, you have got 1.5 R on that one. So it is possible if you're going to scalp. I mean, ES would be better for scalping than NQ. NQ for decent little swings, but ES, because it's pretty grindy through this session, I'd just be I'd probably just have looked for for little scalps. Maybe you could have played it towards settlement here, played with a short towards settlement. And let's have a look at the volume pressure. If you had played 4 shorts into that, you've got an upthrust here. So I mean, we're just looking in hindsight here. You've got liquidity there, 4, 5, 75, where they're building up liquidity, and you've got a 1 tick top tick. So you've got a price here and a 1 tick top tick, and they still traded 78 at that, which is a decent number. But that that's the category C, supply and demand. That's quite a hard trade to take, especially in random chop conditions. But I was just seeing whether the volume pressure could have been useful on this one. So if we take this little volume pressure and we go all the way up, it's getting us into this zone that it's achieved that. So yeah, maybe it could have provided some help. Again, something that I've got to go and test, back test, live test, etc. over the next week or so to see whether it could be really useful to me or not. But it does show some promising signs. Okay, going back to so this is quite nice. When you've zoomed out NQ, so this is what I was saying, that sometimes it's easier to see this in NQ where you have zoomed out. So what can we see? So let's start marking this up. So we have clear liquidity here, and we have it banked with liquidity here, and that they did particularly bank it just here. So they made it clear, and they increased it there too. That yeah, they were supporting that. All right, and you see them place that liquidity there. So if you look at when they place that liquidity, you draw your vertical line and see when they did that. They did that before we got the bottom, right? So this is what I was saying the other day about resting liquidity being a double-headed beast. It can be used as support resistance, and it can be used as targets. But because we cannot predict the future, we cannot know which is more likely to be used. So on this occasion, you had that liquidity there as support and that liquidity there as a target. So you had support and then you had a target. So you've got to bear that in mind when you look at that liquidity in ETH, that it can serve both purposes, but it may only serve one of those purposes, or none, or both. But I think it is definitely more useful than not having it. You've just got to be aware that there is the opportunity for them to hoodwink you. Okay, that was a nice little move as well. And yeah, when we're looking at these micro auctions, as I said the other day, you're looking at all of the numbers in the last 4, 5, 2, 3, 4, 5 price levels to see whether they are really interested in auctioning up much further. And you're also looking at the liquidity that they're going into. So here they actually hit the liquidity, even though it looked like they wanted to go much further. You also look at the price structure, and here you've got essentially what is a top tick or up thrust, and then a nice push back down. And you also have a look back at this action here to see whether there were any of those vertical type slips. I mean, yes, but it's not the best example. That is a much better example there. And we tag settlement as part of this drive up. So yeah, you could just say that in ES, the breakfast traders have taken us down to settlement in ES and taken us up to settlement in NQ. So all we're doing is basically chopping around nothing, being the close from Wednesday. When we zoom out again, we can see that liquidity build up, which can provide some solid resistance to push us back down again, even though it looks like they haven't finished auctioning at the high. Again, nothing is 100%, but we are interested in this level here to see whether they get a reclaim back up to the 48.5, 48.25 level or not. Okay, let's talk again about this time of the year. So yeah, it gives us an opportunity when the market isn't doing very much to talk about seasonality, amongst other things. We're right at the Thanksgiving weekend. We're coming up to the end of November, then we're into December. So we've got a couple of seasonality things that we can discuss here. One is currently playing out, which is ordinarily they don't tend to tank the market, and tank means they don't tend to drop it hugely before a holiday weekend, whether it's Labor Day or Thanksgiving. So if there is a big dump in the 3 hours that the market is open tonight, I'd be a little bit surprised. It can happen, but I would be surprised. Okay. The second thing is that after Thanksgiving, the seasonality normally points to a slightly bearish look until the Santa rally comes hard into play. we have to temper that with the location of the market. And if I drag that daily back in, the fact that we are so close to this high here in ES and this high in NQ, and the fact that there's probably major stops just beyond there, that it seems to be too tempting for them not to try and tag those stops before any pullback, but we shall see. Stan, I'm just aware that in Discord it is just you and me. It is a real holiday session where we do not have many people online because everybody is on holiday. That's really quite interesting. On Wednesday we had a lot of people watching live, so this is a bit of a contrast today, but that isn't surprising considering that the market is so dull. And talking of dull, what have I not done today? I have not dragged in the statistics, so let's drag in the statistics. Yesterday and today are going to pollute these statistics, so whereas I currently use 10 trading days to determine these averages, I may tweak them for next week. By tweak them, I mean I may extend it to 12 or 13 days, because if you've got 2 days in 10 which are dramatically smaller in terms of range than 8 of the days, then the statistics become a little bit meaningless. But anyway, let's have a look. But you can see already, just because of yesterday, the ETH average in NQ has dropped from well over 100 to 94. That's just because of what happened yesterday. And we can see even though it's dropped 94, it's only half of that for NQ and half of it for ES. The tick is live now, so you can see that actually flickering around. So the internals are actually up just barely. So, and the relative volume was 48%. And if I drag back this and we have a look at the actual relative volume today, we started off about the halfway mark, 50%, and essentially that's what we've just stayed at. So there's normally during a session you'll see a big up or downward curve, but there hasn't really been one today. Okay, let's have another look. So we've got a nice little trap in ES here, where they did absorb some sellers and have been pushing up and taking their money. So that is quite nice to see how that delta can work in ES. And also here, you got a note there. Let me just drag a pen. This is the definition of a rollover at a swing point. If you have single digits worth of trades at the extreme, and that is the extreme there here on this swing, 4, 5, 6, 675, there were only 7 traded. So you've got a combination of a lovely delta tail with plenty of sellers, and at the extreme only 7 traded. And yeah, I think this was what we were talking about as the scalp. Well, that would have gone a little bit further than I imagined. So it would have done more than the 1.5R. Okay, time check. We're sort of down to the last 5 minutes of our dull session today. Hey, good morning, Tom. I hope you are well. There has not been a lot to talk about, but we have talked about the Bookmap Black Friday sale, which is an excellent to see, 3 months at a considerable saving. And we've also talked about the volume pressure imbalance in Market Pulse. And the one thing I didn't point out was these 2 dials there. I've got them side by side, so you can see when they're working in tandem. So that is one thing that I think is sometimes more useful than looking at them individually when you can see that they're both at their extreme. So that might be after we've formed a swing point and we're kicking off in the other direction. Um, but the dials, and I think you can change them to some kind of vertical dial. Let's have a look. What can you do with them? No. Let me just dig that out. It's worth finding out. Circles, horizontal bars, or vertical bars. So if we switch to horizontal bars, it can be like that, and vertical bars are like that. I must admit, vertical bars are more my cup of tea, so I might do that on the other one as well. So let's just switch them both to vertical bars. That to me is more like a meter or a gauge or like a volume meter, so that if you can see them both pushing towards 75, 80, 90% at the same time, and it's at a price that you wanted to short, that could provide benefit. It may be easier to see that as two together than looking at two big heat maps side by side. And I normally have those heat maps next to each other, but having a little gauge like that so you don't have to look at the other heat map with such intensity could be something that's really quite useful. Yeah, the thing to really note about this little slip and reclaim here was that gave you a tremendous opportunity to get in to go and tag that liquidity up there. So they can be really useful, but you have to be in NQ you have to be very, very quick or that trade is gone. Good morning, Adrian, in Discord as well. As I was saying when I started this off, I was not expecting many people to be attending live because we are on a holiday weekend, we are in the middle of Thanksgiving and Black Friday, and I thought people would be doing other things than trading chop in the breakfast hour today. And yeah, so as we come towards the end of this session, so let's have a look again where we are in the profile scheme of things. So we're looking at Wednesday's profile, and we really are in that bell curve in the middle. And that's all we're doing. So in essence, if you were trading yesterday and today, you'd be looking at that bell curve saying it's clearly defined, and I'm looking for extremes for mean reversion type trades to get towards the middle, to get towards the settlement, which was just there on the Wednesday. That would have been my ordinary strategy there for this kind of holiday market. And it doesn't just apply to Thanksgiving, it can apply to other holidays. The exception to that that I found tends to be in early January, the start of a new year, because a lot of these larger players have closed their books, so they've got their results in from the previous financial year or calendar year. The mean reversion game there doesn't apply so well, so that there can be some really, really big moves on thin liquidity that happen in early to mid-January. And I was also saying that, with this being Black Friday and a time of sales, it's an ideal opportunity for people to look at all the subscriptions to different things that you have in your trading and provide some kind of objective metric as to whether they are useful or not. In other words, doing your own report card on every single subscription that you have and seeing, is it helping my trades? And if you think it is helping you, you've got to demonstrate to yourself why. If you're trading futures and you're trading 4 or 8 point swings in ES, you've got to say, how does this help my 4 or 8 point swing? Just going to have a look at the end of this auction in. That's nice because it's got quite a nice little tail. But again, I don't know if this is necessarily a location where I'd want to short, or whether I'd even want to short at all going into the open on a holiday Friday. The only thing I'd really want to short towards is this, which is Wednesday's settlement. Sort of it had some huge move up or down, and then going and playing a mean reversion trade back to that. And I think I mentioned before, or at the start of this webinar, I did take a short about 15-20 minutes before the webinar, and it was, it was in line with that strategy, even though it was pretty much a scalp in NQ. Yep, it's driving a little bit higher, it seems, so we've got to see what they want to tag. So we're looking at this 1 and 8 to see whether they really want to continue auctioning in that region and above, or whether we are now going to retrace a bit. And so far that 1 and 8 are being untouched. So that's the old micro scalping. And then we've had this slip here. So when you see them not want to continue in that direction for the time being, it may be because they need a liquidity dip to get the fuel to keep going higher. So, if you are, if there's a weakness in your game and there's a danger that, you think it's going up and you jump on towards the end of these moves, there's always that danger that they run out of steam temporarily and they need to take your stops to get down, to get some more fuel to keep going up, right? Or you provide the fuel for them to have a really decent sized reversal. Okay, I think I have gone past the 9 o'clock. I know we were really in chop today. Thank you very much for coming along. Yeah, I can't really say that we had an awful lot of market action to talk about. It was more sort of very small swings, but anyway, I hope it was useful to some people, and I hope you have a great holiday weekend. Thank you very much for coming.